Is the market really crashing? There sure is a lot of chatter and fear out there. The Temecula Valley real estate market is declining, no doubt. So how much have Temecula and Murrieta and Menifee prices declined this year? I'm going to be giving you the info on how much we've declined year to date, and we're also going to be discussing who should be buying and selling homes in this market and who should not, in my opinion. I'll be letting you know exactly what's happening in today's market. Hi, I'm Jessica Genung with the Genung team in Active Realty. Thank you, as always, for stopping by my channel. I cannot tell you how many news stories and commentators I have heard over this year discussing the real estate market. Many of the experts are saying prices are not going down or they will not go down. Some are just saying that they are increasing at a declining pace. While prices are not declining in all markets nationwide, we're definitely declining in the Temecula market, and we are on about month 5 of home declines. The good news is it's getting much easier for buyers to purchase homes in our area. Competition from other buyers is way down. Sellers are taking offers quite a bit under the asking price on a regular basis now. Sellers are getting nervous. Basically, it's gotten pretty tough on the sell side, but there's quite a bit more to the story. It is very apparent that the market is declining across the board in our valley, from Menifee to Murrieta to Temecula. No, I don't think the market is crashing, and I'll explain why later in the video, but I sure do know a lot of people, and I get a lot of comments that this is the beginning of a huge crash. I disagree with that as of now. There has been the occasional month of prices bouncing back up like Temecula did last month, but as I said in my last monthly market report, 1 month does not make a trend, and I was expecting Temecula prices to come back down in October, which they have. As of the date of the making of this video, with a few days left in October, the median sales price in Temecula for a single family home has dropped to $695,000. Since the peak in April at $767,500, Temecula prices have fallen 10.4%. This is in about a 6-month time period. That $695,000 number is the same sales price as December of 2021. So all of the gains that were made in the beginning of this year have been erased. To put this net zero into perspective, the Temecula sales price increased 20.6% in 2020 and 19.6% in 2021. Crazy, huge gains. I'll come back to this again, but keep in mind those equity gains from 2020 and 2021 are still there for homeowners and their net worth. Murrieta peaked 2 months later than Temecula in June of this year at $705,000. As of the filming of this video, I have the median sales price in Murrieta at $655,000, which is a 7.6% decline in about 4 months. That is around the same sales price as January of this year. So again, the year-to-date equity gains have essentially been erased. But like almost everywhere nationwide, Murrieta also saw huge pricing gains in 2020 and 2021. The sales price increased 18% in 2020 and 22.3% in 2021. Like the Temecula folks I just mentioned, a Murrieta homeowner still has 2021 and 2020 gains in the books. The city of Menifee peaked at $598,000 in May. As of today, the median sales price in Menifee is $569,000, which is a 5.1% decline in 5 months. This $569,000 is the same price as around February and March of this year. So Menifee, which I find to be very interesting and a little bit surprising, is holding on to its equity gains better than Temecula and Murrieta. Go figure. The Menifee sales price increased 17% in 2020 and 25% in 2021. On a percentage basis, the Menifee sales price increased the most out of our 3 cities. So should anyone looking to buy or sell real estate just freeze because there's a lot of fear out there? Of course not. The market volume is down, but it's still chugging along pretty decently. I have a new client that I just met with who lives in England, and he and his wife want to move out to Temecula. His real estate agent in England said that the market there has completely frozen, which this agent was actually fine with because he said he needed a break after the craziness of the last couple years. I can relate, and we are enjoying the more mellow pace a little. But our market has not come to a grinding halt like he says about England, and transactions are still happening every every day. If you need to sell your current home before purchasing your new home, it is not going to be a buyer's market at the same time as a seller's market. It obviously doesn't work like that. I never recommend trying to time the market because it is almost impossible to do. I will tell you a story which has happened to clients before with one of your worst case scenarios. People trying to time the market by selling when they think that we're at a high point, but we're not. I know there were many folks who thought the sky was falling and panicked and sold their homes when COVID hit. The plan was to rent and to buy back in later lower. Well, those folks either got priced out of the market completely because the prices ended up going the exact opposite way, or if they were not priced out, they had to pay more for a similar property or even an inferior property. We can't predict what will happen as much as we try to study economic and world affairs, so nobody knows for sure. And if they act like that they do know for sure, I would be leery of that advice. You have to evaluate your own current financial position and job stability. Ask yourself, is the kind of home that you want for the price or the monthly payment that you can afford available in today's market? I purchased 3 single-family homes as an investment, which are out of state over the past year. I am aware that we are not at the low of the market, but these properties, they met our criteria for cash flow. We like to be around a $500 a month profit per rental. I share this with you to demonstrate that I'm not personally afraid of this market and to emphasize that your individual situation of your family needs to take priority over what is speculated to happen in the market or not happen. I also share this with you because you might think that it's easy for me to say to be bold in this market because we are in very unstable times and it is definitely scary, but we are putting our money where our mouth is. By the way, these 3 homes are currently the only rentals that we own, so we are not huge real estate investors or anything, but I do love real estate as part of a balanced portfolio. Here is my current preferred asset allocation for the heck of it. So 35% real estate, 30% stocks and bonds, 30% cash in the bank, and 5% miscellaneous assets. I think rental properties are a great part of a diversified portfolio, and we are comfortable with real estate, which is why it's #1 on our list. But diversity of asset positions is the most common advice that I hear out there. Cash is a higher percentage than I would normally want, but we work in a feast or famine industry. So with economic volatility as it is, most trusted financial experts have been recommending a solid reserve for when times get tough. I do enjoy talking and learning about personal finance, but we're going to get back to the real estate market. Buyers have been getting some great deals lately. I have been very surprised how much under asking price that the sellers have been willing to accept, especially in new construction. I have a couple of recent new construction clients where the builder came down as much as $40,000 from the advertised price. One of these transactions is set to close on Monday, which will be right before this video is published. The builder also threw in the solar panel system, a refrigerator, a washer dryer, which new construction typically does not include, plus blinds throughout the whole house. They are paying 1-year prepaid HOA fees, builders paying closing costs, and they even had extra credit to buy down their rate even further. Some builders are even renegotiating with buyers already under contract. One of my clients purchased a new construction home out in Winchester back before the interest rates started rising so rapidly. This buyer did not have their rate locked, and there were no rate lock incentives when they went under contract like there are now. Rates had gone up a lot, as we all know, and this buyer, she felt like that they could no longer afford the home comfortably. The builder was really great to work with, and they assured us that they were going to help, and they did. So between the lender and the builder, they contributed an extra, I think it was $21,000 on top of the already generous closing cost credit my client was receiving. Here is the situation with the builders from the trenches. For starters, we're coming up on year end, and the builders have certain quarterly and year-end goals that they're trying to hit. Also, the builders, they have had a high amount of cancellations lately, and so they have been trying to make up for these cancellations by offering some steep discounting and incentives on homes that can close before year end. In upcoming weeks and months, I am going to be doing a free webinar teaching the 7 best ways to save money on a new construction home purchase. I'm putting the finishing touches on the slides, but we are targeting December for the first couple webinars. If you would like to get on the interest list, I'm going to include a link for that down below in the description where you can sign up to get more info. Back to the market. A lot of folks are thinking because prices are declining that they should wait to buy. While this might make sense for some buyers, you have to look at the full pictures. Rates have been hovering around 7% lately and rising. So you should run the numbers of a potential lower purchase price versus paying a higher interest rate. So I've got some numbers here on a real life example of if you were to purchase a $700,000 home today, how much would prices have to go down if the interest rates keep going up? So say they go up, like another point or so to 8%. How much do the prices need to come down for you to have the same payment? This is interesting information. So purchasing your home today for $700,000, you're putting 10% down, you have a $630,000 loan. My lender with the best interest rates right now, he typically has below market interest rates. So he's got it for today. Rates came down a little bit this week at 6.625%. So your payment is going to be today, all in taxes, insurance, everything, $4,989. So almost $5,000 payment. So to have that same payment, if the interest rates do go to 8%, like I'm hearing a lot of people say that they could be headed that way, your purchase price would actually have to come down $75,000. So it would have to come down to $625,000 at an 8% interest rate if it keeps going the way that it's going, putting your loan amount at $562,500 to give you the same payment, $4,980. It's $9 difference. But similar payment, $75,000 less, but you're paying an 8% interest rate. So these are the decisions that I think if you're considering buying or waiting, I think that you need to factor in the possibility of these higher interest rates. So who's comfortable buying and selling right now? A lot of folks in the market currently to buy also have a house to sell. This goes for many of our clients. We have clients doing 1031 exchanges and several clients that were homeowners in areas with a higher cost of living and higher real estate values, such as like San Diego and Los Angeles. Park City, Utah is a fun example. We have one client moving here from there. They've had it with the winters. It's already snowing there. For a lot of these types of folks, it's a pretty easy decision to purchase here since they have accumulated a lot of equity in those expensive areas. Some people, they can purchase all cash or they can get a relatively small loan of 50% or less of the purchase price out here. Who should not be buying right now? I think it is very dangerous to be a flipper right now. So there's a lot of investors and investment companies that buy properties directly from owners, typically at a below market price. They invest money into fixing up the property and then they put it back on the market for a lot higher price and they try to make a profit. Because everything's so volatile right now, prices are declining. I think it's a particularly dangerous time to be a home flipper. Now, buying a flip once it's already complete, that is a different story, and there might be some opportunity there because I think the flipper profit margins are down. So I think it's fine to buy a flip, assuming that they did a good job on it. You might be able to get it for less than you could typically buy a fully remodeled home for. So who should be selling in today's market? Well, if you're thinking about selling in the near future, if the market keeps trending the way that it's trending with the prices declining, I would say that sooner is going to be better than later. The tricky part is, do you have somewhere to go? And if you're just exchanging properties, that's fine as well. You're gonna have the benefit of it on the buy side, and you are gonna have a little bit tougher time on the sell side. But buying and selling, in my opinion, is a wash. But if you do have a place to go and you're thinking about selling, my suggestion, my personal opinion, is sooner is going to be better than later. The amount of available listings for sale is currently pretty down. A lot of sellers, they are not in a position where they have to sell. There's not very many distressed homes on the market. So sellers are just kind of in wait and see mode, which in my opinion is going to be leveling out the prices in the market because inventory is declining currently. Let me know what you think down below in the comments. Are we crashing? Are we just slowly declining? Are we going to be picking back up again next year with interest rates coming back down? Would love to know. We'll see you next week. Bye.